Today, we're dissecting the latest quarterly Bitcoin report from ARK Invest. They're known for a sharp, data-driven approach, and we are going to break down their findings to make sense of a market that's sending deeply conflicting signals.
36.1%. That is the peak-to-trough drop Bitcoin experienced in the final quarter of 2025. A drawdown of that magnitude forces every single investor to step back and ask some very hard questions about where this market is truly headed. So, what does this brutal price action actually represent? Is this just a healthy, necessary correction on the path to new all-time highs? Or is it the beginning of a genuine capitulation, a long, painful downturn? The distinction, as you know, is everything.
To get to the bottom of that question, you have to look past the noise, ignore the sentiment, and analyze the hard data. And that is precisely what ARK's report allows us to do.
All right, let's begin with the bearish case. We will examine the on-chain data to really understand the anatomy of this sell-off and get a clear-eyed assessment of the market's underlying weakness.
The most direct way to gauge market sentiment is to simply observe what sellers are doing. Their actions, specifically, whether they are selling at a profit or a loss, tell the unvarnished story of the market's health.
And the key metric for this is the Spent Output Profit Ratio, or SOPR. Think of it as a clinical tool. It shows, with precision, whether coins moving on the network are, on average, being sold for more or less than what they were bought for.
As you can see right here on this chart from ARK, the SOPR has been pinned below the break-even line of 1. This means that, on aggregate, sellers are taking losses. They are transacting their Bitcoin for less than they paid. That is simply not the sign of a healthy bull market. What's even more concerning is who is doing the selling. The long-term holders, historically the most convicted, resilient cohort of investors, are starting to realize losses. When this group loses faith and starts to sell at a loss, it often signals a much deeper correction is underway.
This final bearish signal is unambiguous. As the chart demonstrates, the yearly gain-to-loss ratio has inverted. When the dollar value of realized losses on the network exceeds the value of realized gains on a yearly basis, it confirms a significant negative shift in market structure.
So that is the bearish case, and you have to admit it's a serious one. But it is only half of the story. Now let's pivot and examine the bullish counterarguments, because the data also reveals some pretty compelling signs of underlying strength.
First, let's talk about volatility. Believe it or not, in 2025, Bitcoin's price swings were the smallest in its entire history. This suggests the asset is maturing, moving from a purely speculative instrument towards something more stable, which is exactly what could attract larger, more risk-averse institutional capital.
Now, this next chart is absolutely key. While the price did break below some important short-term trend lines, it found powerful support at what's called its on-chain mean. You can think of this as the average price at which all coins were last moved, and historically it has served as a very, very strong price floor. And of course, the new spot ETFs are changing the game. Notice how the price corrected directly to the average entry price for all ETF investors. Because this huge group of new buyers is now sitting at its break-even point, they are far less likely to panic sell, creating a powerful new line of support for the entire market.
Finally, we look to the derivatives market. This significant spike in long liquidations shows that excessive degenerate bullish leverage has been completely purged from the system. Events like this, where forced sellers are washed out, often mark a local bottom for the price.
All right, now let's zoom out. Bitcoin doesn't exist in a vacuum. We have to analyze the macroeconomic environment, which ARK believes could be a coiled spring, ready to launch all risk assets higher. ARK makes the case that the U.S. economy is a coiled spring. This chart shows consumer sentiment at historic lows, on par with the worst recessions. When pessimism gets this deep, it means that even a marginal improvement in conditions could trigger a very sharp economic rebound.
Gold is also sending a fascinating signal. This chart plots gold's value against the money supply. You can see that when this ratio spikes, as it has recently, it has historically been a prelude to strong performance for riskier assets, like stocks and, yes, Bitcoin.
And finally, there's inflation. Alternative data, like this from Trueflation, suggests that price pressures are actually well contained. This gives the Federal Reserve the green light, the flexibility to enact more supportive, accommodative monetary policy, which is historically very bullish for asset prices.
Okay, we've laid out the bearish case, the bullish case, and the broader macro picture. Now, let's put it all together and see where ARK Invest officially lands on all of this.
In a nutshell, this is ARK's thesis. Yes, the market took a major hit, but it is holding firm at critical support levels, volatility is plummeting to historic lows, and the wider economic environment might just be setting up for a major recovery.
So after weighing all of this conflicting evidence, ARK's official outlook isn't outright bullish or bearish. It is one of cautious optimism, a clear acknowledgement of both the very real present risks and the significant potential opportunities ahead.
Which leaves us with the fundamental question for 2026. Does this decline in volatility and this resilience at key levels mean Bitcoin is finally maturing into a stable macro asset? Or is this just the calm before another violent storm?
If you value this kind of no-nonsense, data-driven analysis from Finbot Insights, please take a moment to click like and subscribe. It is genuinely the best way to support what we do and ensure we can keep making these explainers for you. We must conclude with a critical reminder. This presentation is for informational purposes only. It is absolutely not financial advice. Do not trust social media influencers. Do not even trust this channel. The only sound approach is to conduct your own extensive research and consult with a qualified financial professional before ever making an investment decision.